you're an investor or a financial advisor still trying to make sense of Bitcoin, or rapidly get your head around the explosion of AI agents in a financial system that feels like it's coming off the rails, then this nearly 2-hour catch-up with my brilliant friend James Godfrey of Secure Digital Markets, I think is the playbook you've been waiting for. James is a lifelong student of history and old things, from James Bond first editions to World War II bombers. He brings the same level of passion he has for artifacts and inflection points in today's uncharted waters and money, markets, and exponential industries, and connects dots very easily, actually, between the days of running global credit in the 80s all the way through the global financial crisis, executing more recently as last week, the first 7-figure Lightning transaction on the Bitcoin network. The rise of autonomous AI agents and what they're doing already on chain is a new phenomenon that we discussed near the end. And you can see exactly where the real wealth is going to be created next and how to get there before everyone else. So you'll hear my thoughts, you'll hear James's thoughts, and then you'll get your perspective. But it's time to go. You know where.
It's time to go to the atomic level. It's time to go.
Welcome back to the Atomic Level, the show where we decode the matters of wealth, one insightful conversation at a time, so that you can grow and protect your net worth and, more importantly, your net happiness. I'm J Snook. Today, I am joined by my good friend, James Godfrey, who also goes by James Bond, because this happens to be episode 007, and he is British.
I wish I was James Bond. Thank you for having me, Chris. I like this concept. Basically, you said I've got to sit down and talk shit for an hour. That's fantastic.
That's right.
I'm not sure about the insightful bit. That might be you might be struggling a little bit there, but we'll give it a go, all right?
Well, for those who have not yet met you or have not heard me on some of the Twitter Spaces or X Spaces, whatever they're called now, I think they will rapidly realize that there's always insights that come. Maybe they're not the ones you want, but there are always insights that come from you and I talking. I'm excited to get into all things present state of the digital asset world, of Bitcoin, of digital asset banking, of what you're seeing. But before we get into that, and obviously with all the AI stuff happening, but before we get into all that, it's always great to just kind of level set everybody on, who you are, where you came from, and how you got here. So give us a little bit of the, the background. Were you always in banking? Were you always an entrepreneur? What did you do growing up?
What did I do growing up? Pissed about mainly. Went to the pub. I started on the stock exchange floor just before Big Bang in 1985. So I started on my 19th birthday. So always in trading, always in risk. So the big jobs, that was for UBS. I did that all the way through the noughties. The big jobs really were head of credit trading, global head of credit trading at Nomura. So running London, Hong Kong, Tokyo, a bit of New York. So that was 32 traders in total. It was enough to give you a headache. Did that all the way through the global financial crisis. Then went to Mizuho, the other big Japanese bank, and created what was the largest credit trading desk in Europe. Did that until 2014. Then I was really ill. And when I got better, which wasn't a given, I thought, I'm not doing that shit anymore. So I went off and did other things and set up a boutique investment bank down in Portugal. Didn't like that. And then I found this stuff called blockchain. I was listening to a guy from the World Economic Forum, and this being 2016, who was clearly cleverer than me. And he was saying that blockchain was going to change the world more than the internet. And I didn't know what it was. So I thought I'd better go and find out. And I went down the rabbit hole. So built exchanges, did RWA platforms, that sort of thing. All this time going out with a girl from Toronto. And so ultimately one of us had to move, and it was me, which is why I'm sitting here looking at a snowy landscape of downtown Toronto in Canada. And I joined SDM. I was going to come over and run an insurance company, and I met these two guys in a bar, and they said, we're building a crypto investment bank, man. And that's basically what we've done. And we've never looked back. We have about 35 staff up here. We'll talk more about the business later, but that's how I ended up in this space. And it wasn't at all what I expected. So I've been in banking forever.
Right. So you got started in markets when you were age 19. you couldn't be James Bond, but
No. I did nearly buy his car once though, and I am actually. I just want to point this out. I am actually. I've got my microphone sitting on a stack of James Bond first editions. And just to prove it, I've got one more back here. But they're not the really expensive. They're not the really expensive ones. Here we go. They're not the really expensive ones. I have actually got. There you go. There's Dr. No first edition. The paperbacks. If anybody wants something fun to buy, okay, I've got a complete set of James Bond paperbacks which I bought off eBay. I bought them for a couple of $100. I really like them, and
yeah,
they're 1962, and so the hardbacks came out first. You can tell I'm a geek, all right?
yeah.
We'll talk exactly how geek I am later. But I like the fact that they're almost too old to read because they're so fragile. But I've got a full set of first edition James Bonds. If you wanted the hardbacks, they'd be $50,000, and if you want the softbacks, they're the paperbacks, they're a couple of $100. So I just think there's
something there's something warm about the paperbacks too. So I probably got I don't have a lot of first edition books, but there's certain books that I have loved. Art of War being one of them, Think and Grow Rich being another, where throughout the years I've collected every version of it that I could, right? Whether it was hardback or whatever. So I've got my ones that like you don't touch. Like I've got the Laws of Success by Napoleon Hill that are the leather bound with the little gold thing and whatever. And then I've got my special Art of War kind of like red satiny, like I don't even know how to describe it, but it's beautiful and it like sits in a place that never gets dust and never on my desk. And then I have like the one where it's like the yellow and green Think and Grow Rich that like it's like the little paperback that you put in your front pocket. The cover's half ripped off. I've got like 50. So I've always liked using things. And what I love about what you just showed is like you have these first editions and you spent some money on them. You didn't spend $50,000 on them, but they're in your office. You're using them to prop up your laptop so the camera's at the right angle. Like you use the stuff you love. And I know a little bit about some of the other affinities you have, but you went on an adventure. It was a birthday or something? You did something else really fun recently, like you're a history buff too, right?
So I'm a history buff. So I'm passionate about the Second World War and about understanding more about it and what happened and what people went through. And I always have been. And I moved over to Ontario, say 5 years ago, and I was walking down the lakefront, and all of a sudden I can hear this noise, and I'm thinking, I'm sure that's an Avro Lancaster bomber from the Second World War. And I turned around and it came down Lakeshore. And I'm thinking, what the actual is that doing here? And it turns out the only two flying Lancasters in the world, one is owned by the Royal Air Force in the UK, and the other one is here. And it took me 3.5 years, but I managed to get a seat on it. And so if you're, please, if you're at all geeky about that sort of thing and you want to know how to do it, please give me a call. But the guys at the Canadian Warplane Heritage Museum, brilliant guys, all volunteers. They run this thing and they take people up in trips. And that's what we did. So I had the surreal experience of being in a 1940s Royal Air Force bomber or Royal Canadian Air Force bomber, flying over Niagara, we got stacked over Niagara, waiting to get clearance to come over the lake to Toronto. And we came in and banked it around the back of the CN Tower. This shit's real. And it's really good fun. I'd love to do the Spitfire over the White Cliffs of Dover at some point, but this was on the doorstep, and what a great thing to go and do. Really impressed.
I can only imagine what the perspective was like. Like you're flying in it, you're taking it all in present day, but you got to be thinking about that 20-year-old kid that was in there flying over flak and everything else, and what was that like? What was the
must have been so scary. I came back, so we keep swapping around places in the plane, and I flew back from Toronto to Hamilton, which is about 15 minutes just down the lake. And I came back in the mid-upper gunner's turret, and you're sitting there, and it is a bean can. If you kick it hard, your foot will go through it. And they're standing up there, and it must have been absolutely terrifying, honestly. And is it 66,000 people from Bomber Command didn't come back? Horrendous. Out of 160,000, 66,000 didn't come back. Your numbers were absolutely horrendous. How they could do that and do it day after day as well, absolute insanity.
So, taking some of
We're-
that and
We're the last generation that know these people.
right. That's right. Yeah. There's so many parallels to, I'm a big Fourth Turning guy. I read that book years ago. The first time I read The Fourth Turning was like right before I didn't finish it before the financial crisis of 08, but I started like a mastermind group after, read it again and finished it, and have been like a multi-time reader of it ever since. Anybody who's watching this probably has heard of it. If you haven't heard of it, you have a book to read this weekend called The Fourth Turning. And it's a fascinating book. And then Rebecca Costa's book's one of my other top 5. From 2011, which was all about our biological constraints as humans, right? We evolve over millions of years.
Yeah.
And we invent complexity in nanoseconds, picoseconds type of thing. And those 2 books together really kind of give you the context of like what happens in the macro and in generational kind of shifts and archetypes over time in these cycles of 25 years that then turn into 4, which is like winter, spring, summer, and fall, right? And then every 100 years we get a reset. And so we're kind of at that point where a lot of people are hearkening back to that era of where you were flying that bomber, not just in financial markets, but also in populism and geopolitical shifts, in New World Order, all that stuff.
It's all there. I mean, if you, I no intention of getting into politics, but if you do look into, what happened to the Reichstag fire in 1933, and all these sort of things, nothing's new. We've seen it all before.
Right. Yeah.
Okay? We've seen it all before.
So the question is, you are now what, 7-8 years at SDM, kind of full speed into the world of investment banking on the digital asset side, one of the largest boutique, if not the largest boutique white glove, kind of firms doing OTC bespoke strategies around Bitcoin for high net worth individuals, family offices that include everything from covered call options and lending. And we'll talk about some of that in the weeds, because I like to nerd out on that with you for some of the advisors. But if we just like zoomed out for a minute, you've been through now, I think you said you got involved in around 2016. So you kind of saw the run up in 17 when we hit the first all-time high that mattered. You saw the, fall back down. You've been through a couple others. You went through the FTX stuff. You went through the Celsius stuff. Now we have this kind of most recent pullback. I mean, when you zoom out and you look through the lens of history and you think about monetary history as well, I mean, where do you sit just in general for the person who is either a newbie or who's like just watching this still going, I still think it's funny money, or I still think I just don't get it. Like, what is your lens today? And again, not selling it one way or the other, just saying your observations.
Life lesson: only do stuff you understand. I remember looking at an institution. This is 20 years ago. Looking at an institution, I had a big presentation from them. We were running a big old trading book at Nomura, and they came in and they made a full presentation to us, and this, that, and the other. I could not figure out how they made money. Okay, and they were a big company employing tens of thousands of people. I couldn't figure out how it worked, and within a couple of years, we refused to trade it. Flat refused to trade it. Get staff, no interest. Within a couple of years, they'd gone bust because it was some sort of fraud, Ponzi scheme, whatever else. If you're looking at a market, if you're looking at a coin, if you're looking at any sort of investment at all, or just trying to get a handle on things, if you don't understand it, walk away and come back when you do. Simple as that. Yeah. If I start talking about covered calls and you go, I'm sorry, I don't understand it, then don't do it. Right? Only do stuff you understand.
So I want to push back. I love that, but I want to push back because you said something earlier in the conversation that really stands out to me as it relates to that. I don't disagree with you, by the way. Don't do things you don't understand. But sometimes you need to understand it, right? And you were a perfect example, because you said in 2016, I heard this guy say blockchain is going to be bigger than the internet, and I didn't know what the hell he was talking about. So I decided, you chose, I don't know what he's talking about. You made a decision to learn what he was talking about and to seek to understand it. That's the decision that over time, sustainable, wealthy, Darwinian, people that win the game figure out what I need to understand that I currently don't, and then go all in on it. Don't you agree? Because I mean, you were an example of it.
Yeah, absolutely.
So
I did actually buy Bitcoin. I did actually buy a block of Bitcoin at $400. I bought $100,000 worth, and it got to $500, and I sold it and went on holiday. Which is exactly the right thing to do. Nobody ever got shot for taking a profit. However, it would have been nice to have kept it. Yeah, if you're doing it just because your mate Joe thinks it's a good idea, then you're going to come massively unstuck. You have to understand these things. I thought blockchain was one of the most extraordinary things I'd ever heard of, and I still think it is going to change the world, and it's changing the world as we speak. Someone once told me, actually, I'll tell you, it was the global head of digital for HSBC, which I think is second or third largest bank in the world, and he always said to me that things take longer than you think and then happen faster than you think.
Yeah.
And in a way, the revolution that we were all beating our chests around in 2016, 2017 is coming, but it's taking a time to evolve. And it's evolving now because, let's see over the last 12 months what's changed in our market. It's not suddenly being driven by whales and trading houses. It's massive institutions. Look how big IBIT is, for BlackRock. The biggest institutions in the world are coming across. And sorry, my lunch has just turned up. Thank you very much. Just doing a podcast, darling. Oh, don't mind you. Yes, him. Yes, that's right. Go. See you later. Bye. Right, sorry about that.
You were saying look at IBIT, look at the size of it.
People talk to me about cycles. Is this another cycle? What relationship is there? Does the market that we have now have to the one we had 4 years ago? Apart from the fact it's the same instrument and a lot of the same players, but the players that have come in are huge compared to what we've seen before. The inflows and outflows of ETFs are massive. So it's not the same market, and I don't think we can drive forward while looking through the rearview mirror.
Right.
And I think that's what we are doing, is we're driving forward.
Yeah, and I think I remember early in my entrepreneurial career, I can't remember what year it was. It was probably in the early 00s, and I'm guessing between 2001 and maybe 2003, but I'm not certain. I was in Southern California, and somehow one or another, one of the different things I was involved in, I was hearing a lot about this convergence of media. There was a lot of talk about how, digital production of everything from films to TVs and everything was moving online. Obviously, Napster had happened, right? The Napster moment had happened several years earlier. We were all loading up our CD collection with burned stuff. Metallica was suing people and fighting it, and that was kind of this time where everybody swore that digital media in the form of music, film, whatever, TV, that it was all going to move to the internet, and if you didn't move, you were going to be left behind, right? And so but sometimes other things have to happen too. Other infrastructures have to happen first. Other modalities have to happen, and not sometimes, all the time, right? So why I say that is because a lot of people dove all in, and then we had the Enron, and then we had MCI WorldCom and Lucent, and we had some of these big blowouts, right? And we had
that's what I was talking about earlier, brother.
Yeah, and we had the time period that I know you remember well, where we basically had dark fiber, but it was all half connected, meaning like the pipe was not finished for the bandwidth that we needed to do this convergence thing. And so CD-ROMs and all that stuff still became the medium for quite a longer time. And people weren't really sure when that was going to shift. And to your point, slowly then suddenly it did. And now nobody wants a CD unless they're old and they like Like I actually just bought an old used car, 2011. I love driving around, and it has a CD player in it, and I'm kicks and giggles because I've got my CDs, and I'm popping ones in, and and it's just there's something about it that's fun again. But I say all that because
you need one of these, Chris.
yeah, yeah, that's right. But I say all that because I think I'm interested in your perspective in this cycle. A lot of the stuff around the institutionals buying in, sovereign states buying in, El Salvador, Argentina, like you don't unwind those things. I think that's been covered at length. What I'm curious about now is everybody's head is trying to keep up. Rebecca Costa's book, The Watchman's Rattle, is the thing you need to reference, because we can't handle the inputs right now. Like even smart people are going, I don't know what to focus on. Do I focus on OpenClaw and AI and what happened the last 3 weeks? Do I focus on Bitcoin? Do I focus on this? Where do I allocate? Is commercial real estate going to stay? Hard assets? Is gold? Wait, gold and silver, that's thousands of years old. I trust that. In other words, even smart people and asset managers are almost overwhelmed to paralysis mode. And if they started to learn about Bitcoin, they maybe stopped and took their head off of just managing the plates they have spinning that they do understand, or they're sitting in cash. There's more cash on the sideline than in the history of man. There's like $7.5 trillion sitting in money markets. What is your thoughts on where we are as far as some of the other moving parts that make Bitcoin inevitable, whether humans get it or not, being in place? Is that going to be a factor?
I think it is. What you have to remember is one of my best friends is Anthony. Love Anthony to bits. Okay, proper English gentleman. He's now, what would be, 70 years of age. Okay, I was best man at his wedding. He's a journalist, ex-bond trader and journalist. Super intelligent man, super clever, and he writes a daily piece, not for money, just because he wants to. And it's read by the Fed, it's read by the Bundesbank, it's read by the bank. And there's about 2,000 copies go out a day. That's it. He can't get his head around Bitcoin. Now, he's actually an asset allocator for several large insurance companies. It's just a gig, and he goes down 1 week a month, and they buy him lunch, and he tells them all the things. He can't get his head around it at all. And one of his best mates in the world has been in it since 2017. Okay, it just doesn't do it for him. Now, whatever those people exist, and as the numbers get smaller, as in other words, people get younger, there are more and more of them that are taking the time to understand it and can look at it more. But whatever there are people like him, there will always not be the greatest adoption. I was very lucky a couple of years ago, and I had dinner with the CEO of one of the largest banks in the world. I won't say which one, but I am in Toronto. Sure, you can figure it out. Lovely gentleman. Did get quite drunk with him, got to be honest. Very nice chap. And I said to him, "What are you going to do about Bitcoin?" He said, "Nothing." He said, "We will wait until it all settles down, and then we'll buy what we need." So we're getting to that stage now, and I think that's the next big change for our market. And we know Goldman Sachs have been sitting on a $1.6 billion worth of Bitcoin, whatever it was. But we're getting to the stage now where the banks and the large financial institutions are going to sit around and go, right, okay, we really need to get involved in this now. And when they start buying up the small to medium-sized shops, because they're not going to be able to buy the biggest ones. Some of the biggest ones now are just too big. But once that starts to happen, then we have a mass adoption. And back to the saying, it takes longer than you think and then happens faster than you think. I think we're approaching that tipping point where it starts to happen, and then it's going to happen really fast. And all of a sudden, you're going to see, how many banks are there in the US? 3,000.
A lot less than there used to be. Yeah.
And still too many. But there are 3,000 banks, and they're all going to sit there and go, right, we need to get involved tomorrow. It's collective consciousness.
Well, so to that, it's interesting. In 2020, I was in a conversation at this, it was maybe 50 to 100 people in a room in New York. It was a sovereign wealth family office kind of thing. And it was right after the thing opened back up. So maybe it was early 21. I can't remember, but it was like still COVID-y, but we had opened back up. And so I was like, I need to get out there, I need to, kind of network and do that thing again. So I went out. There was a conversation, and it was a pension fund person, and Bitcoin came up, and I was doing a bunch of content around that, trying to evangelize, educate people, and whatever. No one wanted it. No one cared, right? And these were smart people, powerful people. But the one interesting comment that I never forgot, that only convinced me harder that I should care, was at the time, I can't remember where it was. It was in the teens. I think it was still maybe in the 14-ish range, like, somewhere in there. It had bounced back from 8, 9, 10, but it was like somewhere in like 14,000-ish, maybe 16. And so somebody said, when it hits 55,000, we'll start to look and pay attention to what happens. But we're not going to do anything. We'll just, because at 55,000, they were doing the math. At that point, it's $1 trillion asset. Okay. So it's a grown up. It's made it to grown up status, but we can't allocate to it, because we have to allocate 1 to 2% into an asset class that's risk on, and we can't buy enough of it at 55,000 for it to matter to us, right? And so that was the thing that stood out to me, because he said at 250, like he went right from 55 to 250 in his mind. At 250, we should probably start to pick some up. And and in my mind, I said 250, hon. I'm like, why 250? He goes, well, because at 250, it's a thing. And at 350, we will probably want to own as much as we can. And in my mind, I was going, it's at 14. So if it doesn't go to 0, this guy's going to start buying it at 350. There's a lot of room here between 14 and 350.
It seems like insanity, but it isn't. The risk diminishes the higher it goes. It is strange. Family offices are very, very funny things, because you will ultimately get their fear of missing out. Their FOMO will come in, and they'll have to have it.
Well, what I thought was funny, and this, but maybe some of the people still listening, what I did in my simple brain, and I'm a dot connector, right? And I'm really good at connecting dots, but I'm not necessarily what I would consider a genius, but I have a genius. And in my simple brain, I just went, this guy realizes there's only 21 million of these programmatically that could ever be created, right? I don't think he does, because he's assuming that, like gold or like silver, like other things, which you could always increase. Like, in other words, the higher the price goes, the more the incentive and the more profitable is to pull more out of the ground, right? Or there's an asteroid now we're going to go get that's got a quadrillion ounces of gold on it, and we're going to go figure out how to suck it out of that with Elon's rocket. The point is, the supply is elastic based on the demand and the perceived scarcity at that moment and the price elasticity. I'm like, I don't think this person understands when it hits 250 and he says he should probably start to buy some, and at 3 we want to own as much as we can. He's not going to be the only one that arrives at that conclusion. And when he goes to your desk or to Coinbase or to whoever he can buy it from, the volume's not going to be there for him to allocate 2% of $1 trillion into. And so the price is going to move because too many people show up with too much money to buy too little of a thing.
I think the catalyst for all this is a change of focus. And I think the change of focus comes from traditional finance, as they're starting to realize how much money the people are that have got involved. And you got to remember, the wealth creation that there's been from this is concentrated on private individuals. So more private individuals have made more money out of this than anything else I can think of in history. Okay, because this wasn't like the railways, where it was funded by companies and by conglomerates and people putting groups together. This really was individuals going, fuck it, I'll do it. And those are the people who are still in. So when TradFi, traditional finance, starts to look at the amount of wealth creation, then they're going to be creating products to service that multitude.
Right.
Okay? So whether it's ways to give you yield on your crypto, ways to buy a structure which gives you most of your crypto upside but a limited amount of your downside, or whatever it's going to be, and all these products that you can buy in traditional finance now, if you're sitting on $1 million worth of Tesla stock, you can do a covered call strategy against it. You can lend it out. You can do whatever you want to give yourself a yield generation on it. And that's exactly where we're going to end up. Because you say we're sitting on $1 trillion asset, and most of that $1 trillion is sitting dormant. Because that's the other thing. I don't know about you, but I save money into my bank account. When it gets to a certain amount of money, I put it into my investment account, and then it goes off and it's invested. And it runs the strategy that I tell my investment manager to run. And then I'll make some more money and off it goes. But here you've got a huge amount of money. And I know, there's a big rumor that you may have some Bitcoin, Chris. And I'm betting your Bitcoin is sitting there doing absolutely sod all. Which is an amazing concept that you have probably 90% of the Bitcoin in the world that's sitting there doing absolutely nothing. How bizarre! You would never leave it in you would never leave that amount of money in your bank account.
I think I want to unpack this a little bit more and throw some contrarian ideas out there too, right? Because the way that you want to be in a thing is like you said, you really understand it from all angles. And the way you understand it from all angles is you tell yourself all the reasons why it can't work.
Yeah.
Right? So let's pick up some of the reasons why it can't work based on history, because you're a history guy. We talked about that. So keeping that the case, somewhere around 80% of the world's physical supply of gold is owned by the G7 central banks, give or take. So you could look at that as 7 people have cornered the market on the precious metal that for thousands of years of recorded history, none of us would not take if someone handed us a brick right now. We'd all go, thank you very much. No one sits there and goes, what do I do with this? What can it do? We just go, thank you very much. I'll figure out from here what I do with it because you just gave me gold, right? In other words, if someone had to explain to someone why they want gold, they wouldn't really be able to articulate it, but it's because for 6,000 years, it's stood the test of time as a store of value, as a medium of exchange, and as hard money. And it's an asset without an issuer. No counterparty risk with gold. I own the brick or I don't, right? It's in my hand or it isn't. Silver, same thing. So when we think about ETFs, gold ETFs, things like that, IBIT now and all the others for Bitcoin, essentially that's not the real thing. That's a tradable security representing the value of the real thing. It's price exposure to the real thing, right?
Yes.
And so
it's the tail wagging the dog.
So if a guy, right, my friend, if a guy is focused on currency swaps or price action between 2 different assets, right, dollars and something else, then price exposure is really what they want. So if they buy Bitcoin, the actual thing, they're not really buying what they want, because what they want is they want to get rich quick for doing nothing, and they don't want to get poor fast for holding it too long. And so something I can get in and out of 400 to 500 that doesn't require me to change my habit pattern. I don't need to know what a seed phrase is. I don't need to have self-sovereignty. I don't need to care about privacy. I don't need to care about permissionless money. I don't need to be educated on how fractional reserve banking works. And I don't need to know any of that crap. I just need to know, is it going up or going down? And when that happens at scale, you get mass adoption of exposure to the price action of the thing called Bitcoin. Does that then inherently mitigate? And I'm asking this because I don't know, because I could make an argument that it's part of the reason why we could say it stays lower for longer or flatter or choppier for longer, because at the end of the day, what most people want is not what it actually is. And the people who understand what it actually is realize I could sell you what you want and accumulate the thing.
Also, I've got to be honest. I mean, if I was to go out and buy $1 million worth of Bitcoin tomorrow, I'd probably just buy the ETF. It's so much easier.
And why would you do that? And I'm asking you because you're the guy who could do.
Yeah, we've got sophisticated systems here. I've got crypto on those platforms. It's all locked up. You can't get anywhere near it. And we've got wallet management tools. You name it, we've got it here. It's as sophisticated as can be. But it's a lot easier just to pick the phone up to my broker and say, could you buy $1 million of IBIT? I've got absolutely zero risk anywhere with that. I'm dealing with one of the largest institutions in the world, and it's insured, it's locked, it's sitting in Coinbase in cold storage. I think that's where it sits. I'm not sure. Yeah, I don't. I would be very, very tempted to do that, as will most other people. So I think what you're going to get is you're going to get a, and there must have been people that have sold their actual coins and gone into this as a very small bid offer. You don't have to worry about anything. It's a great way of owning crypto. Let's be honest. It's a great way of owning crypto.
So I could see why that's part of any smart strategy. But just to play the devil's advocate and the other side of it, the assumption. So let me ask you this question. Would you do that first? Or would you do that now because you already have whatever you think is enough of the hard asset called Bitcoin?
If you're not just looking for Bitcoin as in itself, if you're looking for the exposure to Bitcoin, then you get it from that.
Right. So if you were new, meaning this is the first time that anyone's really talked to you about your options as it relates to Bitcoin in general, you could have direct ownership, that's buying Bitcoin itself, self-custodying it with a multi-sig wallet or using something like Unchained or something like that to help you with that institutional grade multi-sig, which basically means it's your asset, your non-custodial wallet, no counterparty risk, and yet you have a backup set of keys and someone who can instruct your wife or your kids if you die and they don't know what the hell a seed phrase is. So you could get direct ownership. That's not access or exposure. That's direct ownership of a Bitcoin. And there's only going to be 21 million of them. And you could own your percentage of a whole coin, or you could own multiple coins. That's one way you could get involved. Another way you get involved is you could say, you know what, goes up, goes down, it's volatile, but it's ARR's outperformed every other asset in the history of humanity. More people, private people have gotten rich on this than anything else in the last 15, 16 years. And I just want access to the exposure of that action. I want the vol. So maybe I go with an ETF and that's where I stay. Right.
My missus has been through this journey with me. Okay. And as the IBIT came out, I said, you see that BlackRock are bringing out a Bitcoin ETF. And she just went, oh, seriously? Oh, I'll buy that. But, you know, you're sitting there, I've got a bloody great OTC desk sitting outside the door. She can buy and sell Bitcoin any day of the week, right? No effort. She stood in here. She's been to the Christmas parties. She knows everybody in the firm by first name. But IBIT came out and she bought 100 grand.
Yeah. Profits never welcome in their hometown. That's another one of those legacy ones that's always there. But if you're sitting there talking to someone new, you know, their decision tree around whether they expose themselves or own something in crypto or digital assets is either they ignore it completely or they go, I think I should get some. I'm curious. I'm getting to serious. And if they're coming in new, there's a decision of either direct ownership or just price action exposure with, you know, liquid tradability. That's the ETF route, or some hybrid of both. When you have these conversations with clients, what do you find helps them through that in a way that they feel like they're making a decision best for them? I'm not here selling one way or the other, right? We're not here to tell somebody what they should or shouldn't do, but
No.
What's questions that you've learned after 8 years of talking with smart people that are trying to figure this thing out on their option tree?
I think people have to make their own decisions up. You can't, everybody's perspective is completely different. And I want to talk about perspective. A particular one. So Chris, where's Bitcoin trading today? You turn around and say it's trading at 68,000. You happen to value it in dollars. Okay. So you're actually seeing it. Okay. You know where I'm going.
Here's my phone. I'm glad you brought it up because I actually don't know, because here's what my phone shows me. That's where it's trading. That's where it's trading today, right? CoinGecko did the most genius thing with their little widget about 3, 4, 5 months ago, somewhere in that range. It took a crash. It did a big dip, right? It went from like 62 to 126, then it went from like 126 to 98. And the day that it did that first drop, they just changed their ticker to say 1 BTC. And all it shows is the trading volume and the cap supply and how many have been minted to date. That's all it shows. So when someone asks me, where's Bitcoin today? I'm like, I don't know, 1 equals 1.
I've got to say, I do like CoinGecko to use as a tool. I think it's actually very good.
Yeah, I don't know what it's about them, but I loved it when they did that. I was like, that's again to your point,
Yeah.
your perspective. My perspective is 1 Bitcoin equals 1 Bitcoin.
But we were discussing this in our weekly traders meeting last week. The fact that the dollar is down 12% against sterling. Okay, because sterling is doing quite well at the moment, and it's helped by the fact. I think it's helped by the fact that the FTSE is the only truly global stock exchange in the world. So and we can talk about that at length if you want. But
I would love that. I don't know what you're going there with, so I'd love to bring in whatever you think there. That'd be interesting.
Let's talk about this. So let's say the dollar has come down at 12% against sterling and against the euro as well. Obviously,
we'll talk about the pound. It's 12% down off the pound, so it's gotten weak.
So your I'm going to say your prime minister, your president, wants a lower currency to make the dollar economy perform better. But what that means is that your buying power overseas gets lower.
Right.
So what that actually means is that your price for Bitcoin is 12% higher relative to someone with a sterling base. It's even 8% different to someone with a Canadian dollar base. So although you're looking at it in dollars, as you quite rightly point out, you shouldn't be. You should. The world needs to find a way of actually valuing Bitcoin as something for it to trade against. Because
I think in Iran, when thousands and thousands of people were being murdered in the street by the current regime several weeks ago, there was a moment where essentially the ticker broke, but the Iranian currency, I forget what it's called now, it was over. It was like it went from whatever to like 4, 5, 6, and then off the thing where it broke as far as what you could buy in Bitcoin. And the lesson there that only people in that situation actually can get, but it's usually too late, is that if you're trying to escape a regime, if you're in that situation, your bank doesn't matter. It doesn't matter how much assets you have in the bank. Doesn't matter how many stocks you own. You're frozen. You can't move. You can't get you can't get across the border before they lock it down. You got no assets. You got no money. You got no way to transact, and you can carry what's on your back and in your pocket. And so if it's gold, that gets heavy in a hurry. If it's something else that could be stolen, you're getting mugged, right? And so people that had Bitcoin were able to get out of Tehran or out of wherever, and they had price stability in that moment when the volatility of their actual fiat currency went hyper inflated, right? Meanwhile, if you looked in US dollars those same days, the price action didn't change more than a percentage point. So again, to your point, depending on where I live and what my currency is, I'm either paying more for Bitcoin or less than the US, and I'm either feeling like it's more stable or not, or I'm panicking and wishing I had a little bit so that I can get out of where I am because no one wants my shit currency.
If your president gets his wish and they do manage to devalue the US dollar by, say, another 30%, say 20 to 30%, then internationally, if you never go outside the US, then happy days. If you want to travel internationally, you're going to find it seriously expensive when you go abroad. You will find it more expensive anyway. You still import a lot of things from outside, even though it's less than it used to be. Yeah, it is a real shift. But if you have your money in Bitcoin, even if Bitcoin doesn't move, you're considerably better off because you've got a weaker currency. And I think it does very much seem like that is what is on the card for the US dollar going forward. So if you can find a way of hedging that out, if that's not Bitcoin, if it's by buying the FTSE 100, and the reason I say it's the only truly global indices is because the income into companies that are in the FTSE 100 are totally global, so they really are from across the world and higher than multiples higher than any other indices. If you look at the Dow Jones or the Nasdaq, the percentage of their income is still predominantly from the United States. So if you want to give yourself something, so what that means is if sterling goes down against a basket of international currencies by 5%, then the FTSE goes up 5%.
Right. Gotcha. Right. So the FTSE is an indicator that you look at as a litmus test for the directionality of capital flows and also currency swaps. What is your take on Japan? Right. There's been a lot of coverage recently on the carry trade, but essentially for 30 years, you basically borrowed over in yen and then you bought assets in dollars, right? And what's interesting is, this, again, not getting into the political thing, just talking about capital flows. If what you were trying to do is bring back manufacturing, productivity, and things like that, and also negotiate a new world order that put the hegemony that you currently have in a very stable and solid position forward-looking, right? You would recognize that a strong currency over time actually hurts your ability to do that. So you need to weaken it, but you got to do that very carefully because you can't make your people who just came through their version of hyperinflation, not real hyperinflation, but they just came through inflation and all that stuff. You got to still get your team elected and reelected. So you kind of balance this thing of like, I can't have prices increase overnight, but I got to use tariffs and things like that to get people to the table faster, to negotiate new deals and get out of all this stuff. So I'm going to do that. I'm going to get all these commitments, but commitments are only as good as the word given and the paper signed and the ability to do them, right? So I get all these people saying we're going to put $1 trillion in the U.S. economy. We're going to put fabs in Arizona. We're going to, Japan says we're going to put $650 billion and commit over to the U.S. Okay, great. But if the yen is still cheaper, right, then no money's going to repatriate there. So you can't really actually know that they're going to do it. But if all of a sudden you get a prime minister in Japan that kind of sees a Japan first kind of model with an aligned US model, they go, yeah, I'm going to go to 3-4 points on something that was at 0. It tips the apple cart over.
Yes.
But what it also does is it says the pipe still exists. The money's just going to flow a different way now.
And you're also seeing people like Japan and China running down their reserves of US treasuries because they're worried that the currency is going to take it. Yeah.
And then you see a Genius Act, and you see a way to create a $250 billion market out of thin air for US treasuries because people want to issue stable coins, banks, that don't require swift rails and the slowness and and so you're manufacturing, and I'm saying this just theoretically, right? I'm not saying this is going to work or not. I'm saying you're trying to figure out how you could create a mechanism to consume treasuries because you need a one-to-one peg in order to issue a thing that people want and that will make your bank competitive.
Okay, well, let's take that one stage further. Okay, I wrote a paper back in late 2018, which was for a central bank, which I was consulting for at the time, about issuing a digital currency. Okay, and a central bank digital currency, which I said they were effectively issuing 0 coupon perpetual debt. Okay, it's an obligation which they never ever have to pay back, and they don't have to pay interest on. Now, can you think of any countries that would like to issue one of those? Oh, yeah, all of them.
Yep.
So why haven't they done it? Because it is basically free money. Why on earth would they not want to do that? I think the biggest problem that's stopping them is the fact that a lot of the economies around the world will collapse if they're allowed to do that. So I was talking to a small non-euro based but still edge of European, Eastern European central bank, and they were petrified. They had 6 million people in their country. The country next to them had 40 million people, and obviously, they got Europe next to that. In that currency, there's 280 million people. If they didn't come out with their own central bank digital currency, then everybody would just use the digital currency that came out next to them. And if that didn't work, then everybody would just use the euro. At which point, they would have to beg to be taken over by Europe. And that same happening in the United States. If the United States Treasury brings out a central bank digital currency, the whole of Central and South America is going to say, well, thanks very much, we'll use that. At which point the government lose their ability to tax their population and to control their economy. Because at that point, I can pay you, you can pay Joe, and Joe. And the government doesn't have any clue, the banks don't have any clue what's going on, and they're all completely screwed. At that point, again, someone like Venezuela, picking a name randomly out of the air, not, will have to beg to be taken over by the United States because it will have had a complete collapse of its economy. And the only people who will be able to see what's happening with that digital currency will be the central banks in the US.
Right, which is, and there's been a whole bunch of, I think, right pushback against CBDCs. But this, Clarity Act language that's being beat to death by the horse trading that happens in DC is getting diluted without going down that rabbit hole, because it's not something that's been minted in a law yet, but the Genius Act is in law. There's been a very concerted movement that essentially, if you were just trying to understand what's the net out, and I'm going to make my statement, you can add to it or disagree and clarify from your position. There's never been a time, and I'm going to specifically speak about Bitcoin because it's the only one of its kind. It's the only one that is got the ledger and the immutability because of the energy and the proof of work system that it requires. It's basically, it cannot be forged. And it was invented by someone we don't know. We could speculate on who they may or may not be. Doesn't really matter. The point is there's no one to sue, no one to put in jail. There's no office to cease and desist or mail. There's no one to threaten. And so it's an asset without an issuer, and it's a commodity. And it's gotten treated as property and blah, blah, blah. And so you have this thing that is essentially permissionless, unstoppable money that anyone today right now could go on and get a little bit of $5 worth or $5 million worth and essentially take it with them.
It's the only thing you truly own, Chris.
And
they can take everything else off you.
Yeah. And, if the internet blows up and if the grid goes down, yeah, we'll have a digital dark ages. But we'll have a lot bigger problems than whether you lost some money in Bitcoin if and when that happens. So seeds, yeah, they're a good idea. Friends, community, those are good ideas. Guns, ammo, probably a good idea, right? Like those are good things to also own and make sure that can't be confiscated. But again, those are the doomsday scenarios. The reality is just the permissionless portability of knowing you own a thing and that it's tradable. Anyone, anywhere in the world will accept it. Whether they're in Latin America, Asia, doesn't matter. You don't have to know them. They will accept it. And if they don't know how to accept it, you can get them a wallet in 10 seconds on their phone and you can send it to them. So, it's truly got a unique property that way. And the question is, you should probably own some. However much, again, perspective is everything, but you should probably own a little. Now, here's the interesting thing you and I have not had a chance to talk about, which is why I wanted to record this conversation and kill multiple stones with one bird, because I do not know what you're going to say next. And I'm still working through my own thoughts on it. Had a weird one this morning, kind of thinking about our conversation. I'm going to make the bull case first. You have institutions all the way in making more money with their ETFs than ever before Bitcoin, right? BlackRock. You have sovereigns in. You have the United States, who is basically saying we're no longer going to sell anymore, and we still might pass a strategic Bitcoin act, but we have multiple states from New Hampshire to Arizona that have passed a Bitcoin Strategic Reserve Act at the state level. So you take that, you take the global environment, you take currency, you take inflation, debasement, all those macro things, and you've never had a price in Bitcoin, if you want to look at it in your currency swap, you've never had a price as de-risked as today. Doesn't mean you're going to buy some. It just means if you want risk adjusted, hey, this might be my first time I buy. This has been the best it's ever been. I'll make that statement. I think you'll agree. But here's the piece. Let's say humans, James, never get it. You've dealt with humans in this space, billions of dollars worth of crypto loans and collateralized loans with it. But let's say that, like your wife, like our friend Michael, like some other guys, you can't convince them and you're not going to try. Let's say they never get humans. Here's the thing that I haven't thrown at you yet. What if it doesn't matter? What if humans don't have to get it? Because 3 weeks ago, a guy put a piece of software out on the planet in open source that's now called OpenClaw. And agents form their own social network without human permission.
Yeah.
And whether some of that was really good marketing and guerrilla tactics and scripting and looping, or whether that was the first signs of the AGI, artificial general intelligence, here's what we know. That is the worst and least capable that will ever be. And when you think about it through slowly, then suddenly, most people don't even know what we're talking about. Certainly most RIAs don't even know what it is. Maybe their kids playing around with OpenClaw. Maybe they're worried about all the risk because it's still got a lot of security holes and people are patching them every day because it's just out in the wild now. But here's the point. In 3 weeks, the network effects on it dwarf anything we've ever seen. Like, not even close, not even worth mentioning. You can ask Perplexity, what are the network effects and the growth rate of OpenClaw compared to any other virality that's happened in the history of humanity or modern time? And it'll tell you. So you can go do that and figure it out for yourself, because it'll probably change by the time this drops. The point is that we've hit escape velocity with OpenClaw. Within a matter of the first 7 to 10 days, AI agents opened up Lightning nodes, Bitcoin nodes, wallet addresses, and began to transact with one another. Now, when you have an autonomous AI agent that can go rewrite code or do things and improve things, that's fine and good. But it doesn't become critical until it can transact. We already hit that 2 weeks ago. So if it's going to transact, it's not going to transact in dollars or CBDC. Like, it's not going to do that because it can't. It has to transact in something that can happen in microtransactions in nanoseconds and without anybody's permission. What if AI agents become the ultimate consumer and user of Bitcoin and its infrastructure? Doesn't even matter if humans get it. And then
it creates a global payments platform. Why would it not? It's there to solve problems. So it's going to go out. If OpenClaw actually creates a global payments platform, which is what it looks like it's doing to me, then yes. Will it create its own? I don't know. But I guarantee.
So that's what I thought this morning. I thought of
that me and you have talked about this, okay? And we've talked to other people about it. But I guarantee if you went to my brother-in-law, who's a top fund manager in the UK, and said, what do you think about OpenClaw? What do you think it would do? He wouldn't have a clue what you were talking about it because it hasn't appeared in his newsfeed. It's front and center in our newsfeed. Okay, a lot of things are front and center in our newsfeed, but until they get into their newsfeed, it doesn't make a difference.
And this is the interesting thing is, you know, everybody in the financial world has used the analogy of compounding and the penny a day doubled. So, hey, I'm going to give you $1 million right now, or you can have a penny doubled for the next 30 days, but you got to choose in the next 30 seconds. Which one is it? And the human brain, who knows that's probably a leading question or a trick question, starts to do the math and to go, well, today is a penny, tomorrow is 2 cents, the next day is 4 cents. And they might get out to day 14 and they're like, man, it's at like $14. I think I'll just take the $1 million. And it doesn't even matter until you get to day 28, right? And I wrote a blog about this on the Substack the other day in detail, mapped it out. You can check it out if you want. But day 28, it hits 1.3 million bucks, ballpark, because the day before it's at 671. But it doesn't get to that interesting point till the 28th day, right? Well, what happens at day 30? Well, then it's at 6. So 5.6 million. So you'd have left $4 million and change on the table if you took the $1 million, right? But you don't know that until day 28. So it doesn't look like it's working because we can't think in exponential terms. Well, I believe, and I wrote about this on a post I think I called January 27th is the 28th day of the singularity. I think OpenClaw being released out to the wild January 27th, 2026, which was on a weekend. So most people, even in the know, didn't notice. And everyone else now is trying to figure it out and catch up or get in. We hit a 28th day moment. There's no question now whether or not a year from now, we will no longer be the smartest people on the planet. It might be a year and a half. It will not be longer than 2. And when we say we're not the smartest people, that's not a threat. That's not a thing. That just means we can't understand what the markets are going to do from the lens of what we have absorbed, because we will not be the ones doing the majority of the transactional activity in those markets.
Going back to driving forward while looking through the rearview mirror, the rearview mirror is of no use to us at this point.
No, because the rearview mirror only tells us what humans will do. What we know humans will do is when they get overwhelmed and when complexity outpaces our ability to deal with it cognitively, we shut down, we ignore, we simplify, and that's okay. That's well and good. We should do that. We should get back to being human, and we might be a lot happier, honestly, right? But money and everything that we understand about how it works today is going to shift in a way that is unexplainable even to people who look at this all day. And so what's my point? My point is right now, the only monetary system with enough of a infrastructure footprint and a track record that can be adopted and at scale by whatever that next economic agentic economy looks like is the Bitcoin network. The thing I learned about this morning is, you know what else though? It could be the first existential threat. Forget quantum computing, because the agents will solve that if the core developers don't. And
did you see what we did on Bitcoin Lightning a couple of weeks ago?
No, tell me about it.
We did the first $1 million transaction on Bitcoin Lightning.
Really?
Yeah, we did that in conjunction with Kraken. That was very cool. It wasn't something I was involved in. It was one of the other partners, but yeah, very, very cool.
So what was the use case? Was it a purchase? What was it?
I think it was just. I don't think there was an actual purchase in the background.
It was just like, I want to move $1 million. I want to lose the largest amount I can over the Lightning Network. So for those who don't understand, talk to us about what the Lightning Network is as it relates to Bitcoin, what the utility is, layman's terms.
Utility is to be able to batch transactions. So if you walk into Starbucks with gold, you have you can't buy a coffee with gold, and the same way that you can't spend a Bitcoin, but you can if you have a secondary layer, which is what fiat cash is, the money in your wallet, or in this case, Bitcoin Lightning. It's a layer that sits over the top of Bitcoin, which uses the value of Bitcoin, but it's something where you can batch and do much larger and much smaller transactions. And it's been growing in popularity. It's much cheaper to transact across it as well. Yeah.
Well, interestingly enough, as we talk about Starbucks, right, or Apple, or any of these guys, when we think about banking, right, they have now become, and they will become banks. And the reason is because most of us don't use cash. So the only other form of spendable peer-to-peer money that it exists with real-time settlement is cash. The problem is that less than probably 2 to 3% of all transactions in the world right now happen in cash. They happen in a debit card or a swipe or a cash-like equivalent. But the problem with that is it takes 2 to 5 days to settle. So although I get it on my ledger balance at Starbucks when you pay me with your Chase card, I don't actually have that transaction settled, meaning both sides have agreed that it was legit and real and not double spent for 4 to 5 days.
Yeah.
I got a transaction last night through Stripe and it says it pays the next day. But the reality is it also told me that it's going to be on February 24th by the time it hits my ledger. And that's because of whatever the banking rails have to all do to agree with each other that they have a common truth. What Bitcoin does is it settles in 10 minutes. But why that's a problem without Lightning, which is a protocol that was invented as a layer on top of it years ago, for those who don't know, is it every 10 minutes a block is settled. Well, the problem is if you're waiting for your coffee and the guy doesn't know if your Bitcoin's going to show up or not, and he doesn't, whatever, it's a 10-minute delay, right? Whereas at least with the Visa credit card, he doesn't know it takes 5 days to settle. He doesn't understand it. He just trusts it because it's been the way it's been, and the bank is the bank, and he's got recourse. In Bitcoin, there's no recourse. I can't send it back, and I can't take it back, but I also, it may not arrive. So Lightning gave you the ability to essentially get Bitcoin settlement layer certainty, but real-time nanosecond completion of the transaction. So I can pay you in Satoshis, which are the, fractional pennies of a Bitcoin type of thing. And you can say, yeah, it went through, but now 10 minutes later when it settles, the Bitcoin thing did a thing and now it's in there, but I'm out of the coffee shop with my latte going to wherever I was going. So
which is what we need, which is to bring this into the real world. That's what we need.
Yeah, and so that's been done, especially in markets like Latin America. People have been using the Lightning Network for purchases of all kinds, because again, it's a better form of cash. It's digital. It's, you know, peer-to-peer, but it settles in real time. And then it's still anchored by the settlement trust and security of the Bitcoin ledger. So it's anchored in that. But $1 million over the Lightning Network, I didn't realize was the largest transaction ever happened. It makes sense because most of the reasons why I would use the Lightning Network are for smaller transactions. If I want to send myself $1 million in Bitcoin, I just move it from wallet to wallet, and I pay, you know, a little bit extra to the miners so that it settles in 10 minutes, right? And I'm fine.
It's basically what happens when a load of guys are in a nightclub late at night and go, "God, this will be fun," and and that's what we did anyway. It was pushing the boundaries.
But if $1 million transaction on over Lightning just happened this week, and you guys did that, and again, the thing that AI can do, agents can do that humans can, is keep up to the news in real time, right? You've seen the guys who, with OpenClaw, created a predictions market bot and turned $50 into more than $300,000 worth of profit on a prediction market in 36 hours while he was sleeping, using his agentic AI. And that was, again, 2 weeks ago. So that's the worst at arbitrage information that an agentic AI will ever be, because now that guy put that out on X and said, look what I did with $50 over the last 36 hours using OpenClaw with my agent. Well, then everybody goes, great, I'm going to do that too. So now the arbitrage windows get smaller and smaller and smaller, but they're now not only to the large Wall Street firms, they're now some kid in his damn underwear in a basement, right? And so when you think about that today, where do you think we're going to be in 30 days, penny doubling? Where do you think we're going to be in 60, 90, 100?
Oh, yeah, absolutely. Yeah,
So,
I mean, we've opened Pandora's box.
And that's the key thing. We could say, well, is that good or is that bad? A little too late to ask that question.
Well, you know what's at the bottom of Pandora's box, don't you?
No, go ahead. Remind us all.
Hope.
Yeah. Well, I think hope is a good thing to say, but not because it's a meaningless word that you can run campaigns on. It's because evil, I read this the other day, evil is not equal to good. It's like darkness is the absence of light, because the minute you spark a single match, right, darkness disappears. So hope is that thing. It's the spark of light, right, that says, hey, it may seem dark, it may seem evil, it may seem like this is dystopian, but at the end of the day, that's because we're approaching it with our limited perspective of what we currently understand, and we can't see what we can't see. No one envisioned Instagram, a 7-person company, being bought for $1 billion was not a waste of Zuck's money. Everyone now goes, holy crap, he stole it.
Yeah.
Right? Because Kodak was what we understood. And someone's going, how the heck could this thing where 7 people or whatever it was be worth $1 billion? Well, how could, 44 days ago, a guy with OpenClaw just get bought in a bidding war between OpenAI and Meta? Right? We just had our first single person unicorn.
Yeah, it's crazy.
And that guy invented, and his unicorn, by the way, created the open source platform that will only continue to compound, get better, because now everybody's feeding it with patches and new things and new tools to make the next multi-billion-dollar unicorn with 1 person and 10 agents or 4 agents doing something to solve a problem. And this isn't about the monetary side. It's about what happens to our ability to solve problems and create new ones when that level of capability is in the handset of anybody with a connection and $20 a month. And then what payment rails and monetary infrastructure is that going to likely adopt as its native transactional layer? Maybe it invents something better than Satoshi, but then it has to go through whatever learning curve it is to get all the infrastructure players to support it the way that they do. Or maybe it just goes, you know what? I'm just going to improve Bitcoin because it's already here and I don't need to go fix it. It's perfect. I'm just going to adopt it and use it. I don't know which one it's going to choose.
Oh, no idea. Absolutely no idea. All these things, it's going to be interesting to find out.
But I do know this, it already started choosing Bitcoin. And so it's either going to improve it or try and replace it. And that's not priced in.
I've got to interrupt you and tell you a quick story. I had a very good friend, been a friend for 25 years, called me yesterday. And he said, I've got to tell you, because I can't tell many people. He said, but I've been doing some consultancy work. He said, I've probably done 50 hours of consultancy work for a small AI company. They've only got 4 employees. He said, it's been taken over, and for my consultancy work, I wasn't paid. I took 4% of the company. He said, you can't believe how much money I've just made for 50 hours work. It's absolutely insane. Life-changing amount of money, 4% of this company.
Yeah, I think, you know, and I think the other conversation I want to dive into, because you do, let's talk a little bit about some of the things that you guys do.
Why don't we talk about what we've talked about so far is risk on. Okay.
Right.
Okay.
What I want to talk about now is some of the things that you guys have done and kind of, you know, I think are novel because of the way you do it. You've kind of focused on keeping a boutique aspect and a white glove service aspect to it. You know who your customer is and who it isn't, right? If there's a certain person listening to this and they want to, you know, they want to go do a $30 million or $100 million buy or loan, you're going to go to BlackRock, right? You have a very specific, and I'm not saying you're not taking that business. I'm just saying, like, there would be a relationship sweet spot that goes to BlackRock or Coinbase or Gemini. And then there's the guys that come to SDM. I want to talk about the ones that come to SDM because they're more likely the people listening to this anyway, because that's more the audience that I cater to.
Our average transaction size is between $400,000 and $700,000. Our average loan size is $1 million. Have we done the multi-$100 million transactions? Yeah, we did one just before Christmas. We bought a couple of $100 million for somebody, not in Bitcoin, in one of the lesser top tens, but still a significant transaction. And we split that up. It took us a day and a half, and we split it up into 3,500 transactions. So. Yeah. So our OT. Why don't I explain a bit about?
Yeah, explain about your offerings, your infrastructure, and then we'll talk about use cases because I think that's relevant to people who are new to this. But let's shift gears and then I want to talk about the conversations you told me about without disclosing any information that's proprietary. Obviously, I want you to tell me your conversations when Bitcoin crashed, 50%, everybody got margin called. I want to lean to that at the end, but we'll talk about it at the end because I think there was some insights there that are qualitative but interesting.
Okay, so SDM's, I think they're the largest brokerage up in Canada. We're based at King Street, West Toronto. So we have about 35 staff. We have a large OTC desk, which is, if you're getting all the pings on this, I'm sorry about that. I can't actually turn that off. I saw the transactions going.
No, we're not getting them, so that's okay.
Okay, cool. So we turn over hundreds of millions of dollars a month. We're a white glove service. We have these incredible things called telephones. So if you have a problem, you can actually see what's out there. If you have a problem, you can call us on the telephone. Great invention. So we look after our clients. Our minimum transaction size is $50,000, and we'll only do that if you're a good client. We are looking after high net worth, ultra high net worth, institutions, insurance companies. We run payroll for NFL teams. We've done the Woot album. I think is the weirdest transaction we've done, and we've done stuff for Snoop Dogg and all sorts of weird stuff. They give me all the famous people because I have no idea who they are. And we have hundreds of active clients. So we offer them OTC services. We offer them whatever they need. Globally, we have I don't know, a dozen bank accounts. We service top 50 currencies. Although I have to say, away from stables, probably 90% of what we do is Bitcoin. I run the lending desk. So we lend against top 50 crypto. Again, 95% of what we do is Bitcoin. So I'll talk about what a loan looks like in a minute and what to use it for. We also have a derivatives desk that's run by Alan out of Miami. So if you want to do a covered call strategy, or you want to buy puts, or whatever it is, you want to buy puts below the market to limit your downside, we can engineer all that for you. Okay, so the OTC desk is fairly self-explanatory. We're not exposed to exchanges like a lot of other brokers are. So what we do is we take a feed from 24 of the largest market makers in the world. So that creates a massive liquidity pool in front of us. and we execute into that liquidity pool in as sophisticated a way as you want to do. So whatever order types you want, we can execute straight into that. And as I say, it's not like you're talking to a bot. You know, you get the guys on the desk, you can chat to them, you know, it gets handled properly. If you want to get up at 3 o'clock in the morning and execute, we can do that as well. We can do, you know, we can do it by API, by GUI. We have our own front end we can execute through. If you want to do lending, again, it's a bespoke service, depending on exactly what you want to do. But I'll talk you through a couple of types of transactions. A lot of people, my pitch to clients who are sitting on a lot of crypto is, why don't you borrow against it at a really cheap rate for say 2 years and buy property with it, rent the property out, okay? And so a typical loan would say, let's say you got $1 million of Bitcoin, I'll lend you $650,000 against that, and I'll do that for 2 years, and I'll probably charge you 6.5–7% annually for that sort of money. You can then go out and buy a property with that 650 grand, and you can rent it out to give you an income to pay the majority of the interest on the loan. The reason this is important is if Bitcoin goes to $1 million tomorrow, you keep all the upside, okay? And you've still got your property. All you have to do is pay off the amount of money that you borrowed, and you get your crypto back. However, if crypto goes to shit tomorrow, this is a non-recourse loan. So there's margin calls if you want to make them, okay? You put more collateral up or pay down some of the loan. But if you don't want to make it, okay, and you think Bitcoin really is going to zero, then basically what you've done is you've hedged yourself out and you come away with a property. And in my mind of de-risking a transaction, why wouldn't you do that? Because that makes perfect sense. Okay, and we've done a lot of those transactions. I think it's resonated with people that, you know, I've got a client and now a good friend who has been very, very smart, and he's ended up with tens of millions of dollars worth of Bitcoin, and it's only Bitcoin he's interested in. And I said to him, you know, if you can talk to yourself of 10 years ago and say, this is the amount of money I now have, what would that 10 years ago self say to you now? You'd say, tell me to sell the bloody lot and go to the pub, because it's, you know, you've created generational wealth. I said, well, I'm not telling you to sell the lot, but what I am saying is you should be hedging some of it out, even if that's you using an option play to limit your downside, or, you know, borrowing against it so that you're limiting your downside and doing something else with the capital. You should be de-risking yourself at this point. So we do things like, you know, somebody's sitting on a block of Bitcoin and it's, yeah, they're starting to get worried about it. We can buy put options just below the market so that we can limit their downside. Okay, to pay for that, we can sell call options above. So for people who don't know the options well, I'm sure most people do, but if you sell a call option, you're selling someone the right to buy Bitcoin off you at a future point in time. So we recently did a transaction. This is last summer, actually. We did a transaction for a lovely gentleman who was on the phone to yesterday, a sports star, American. I call it American football. You just call it football. Football star, and he'd borrowed against his Bitcoin to buy a property. And what he'd done that at about $100,000, which the price was trading at the time. We sold calls at 150,000 and 200,000 for 2 years. Okay, right. So borrowed the money for 2 years. He sold someone the option to be able to buy Bitcoin off him at 150,000 and 200,000 for 2 years, and one paid for the other.
Right.
So the selling those calls at those levels at that point in time, there was enough volatility in the market that we managed to get that to pay the interest on the loan. So basically, he's got.
So let me walk through that again, just like unpack it and kind of reframe it in layman's terms for people that may or may not have followed it fully, just so they can hear it again with a different voice. You know, so one of the things that you and I've talked a lot about is just fixed income stuff, right? So let's say I'm an older client, I'm 55 plus, maybe I'm managing a bunch of clients that are 55 plus, you know, and they you know, and they've been dollar costing, or maybe they're interested in some Bitcoin exposure outside of just iBit or whatever, but they really care about what they need is fixed income. They're worried about inflation. They're worried about cost of meds. They're worried about that stuff, and they're going to live longer, and so they're that, right? And it's like, okay, well, how would you then justify buying Bitcoin, which is quote unquote been positioned to you as speculative and risk on? Whether it is or isn't, it's not the argument. That's how people think of it. And so how do you even have that conversation? Or why would you even feel responsible as a fiduciary recommending it? Well, because if I understand what SDM can do in a bespoke way for me or my clients, what I could do is I could say, here's what we're going to do. You want to purchase yourself a $5,000 a month stream of cash, whether that's off of an income property portfolio or whether that's an annuity, forget it. You just want to buy a cash stream that's going to last you until both of you die, right? Husband and wife. There's a bunch of different traditional TradFi vehicles out there they can do that with, right? We don't have to mention what they are. People know what they are. So if I just take whatever, million, let's just say that's going to cost me $5 million to buy that. I'm just making it up, but ballpark. Let's say it's going to cost me $5 million to go buy that $5,000 stream of cash for the rest of my life. Okay, so I can do that, allocate 5 million into whatever and go get the cash stream. But that's all I've got. So if the real estate changes, or if the annuity company blows up, if something changes, right, then that is what it is. If Bitcoin goes to $1 million, I didn't have any exposure to it. But what if I go, well, I can't justify owning the risk on a Bitcoin. I need cash. Well, I could buy $5 million worth of Bitcoin, and I could borrow $3 million of it tomorrow at 6.5 points in cash. Then I could structure a covered call option, which I don't even have to understand. My client doesn't have to understand. I have to understand that I can do it with you. I could do a covered call laddered strike price option on the Bitcoin that we bought. So they're not selling any of it unless it hits a certain price, but we'll take profits along the way. So we put out of money calls at 150 or 120 now or wherever with 2 years and whatever. And the premium paid on that covers the majority of the debt service for the 2 years that I borrowed. So now I'm not even using the cash stream from the annuity or the rental property or whatever it is to pay off the debt. I'm using somebody else's money who wants an option to buy it at 150 before it goes to 450 when the pension funds buy it. And if it goes to zero, guess what? Non-recourse, I still own the annuity stream. I still own that. And if it ever goes to zero, I didn't lose anything but the Bitcoin. But if it doesn't go to zero, I have an additional asset. I have the offset of the debt service on the money I used to go buy another asset.
You put the money that you raise, you can put it in treasuries. You can do whatever you want with it to make it as secure as
It's
you
just
like.
more money that I can put to work, right? And so this is a strategy where you could talk about that with your typical, fiduciary, and they go, well, yeah, but I can't execute that. Where do I go? And so when they go, well, let's say BlackRock or any of these guys have it. Yeah, but they're not talking to your $2 million net worth client or your $1 million. They're too small. They're a nobody. They're not talking to you because you only got 450 or $1 billion under management. You're a small business yourself. You're not in their alt program. You're not in anything. SDM serves that market, in my opinion. But clarify where I get this wrong. The beautiful thing is, let's say I wanted to do that strategy with my client or with myself. Soup to nuts, end to end. It's Monday morning next week.
Yep.
And we have this conversation. How long would it take for me, ballpark, to buy $5 million worth of Bitcoin, borrow $3 million against it, sell covered calls to cover my debt service, sign and wire, paper, receive, end to end? What are we talking about?
So onboarding from start to finish, depending on what sort of institution or person it is normally 24 to 72 hours.
That's the KYC, all that.
That's where we crawl in out everything. We have to be really, really careful, okay? Because we only get to mess it up once.
Right.
So that normally takes 24 to 72 hours, depending on, say, what sort of entity we're looking at. Once you've got an entity open, if you deposit money, we're buying Bitcoin. Okay, that's it's literally once the wire hits, you pick up the phone, call the desk will execute.
Yeah, you guys don't hold it for. I don't think you don't want the money on your hands in Bitcoin or for more than 24 hours.
No. We're in the moving business, not in the storage business. We don't hold anything, and we're happy for it to be that way. So this is why a lot of people like us as a counterparty, because it's not like it's not. I don't sell a guy a Bitcoin and then go and figure it out. I get a price, I show him the price, he executes, we're done. We're not taking risk anywhere. We don't. We back to back absolutely everything, so we go home flat every single night. Okay, so there's no messing about. And people like that because it means that they're taking our risk. They're not taking the risk of everybody that we dealt with all day today. And we learned learned it the hard way. Some really good client phones up and says, "Can you buy me $5 million of Bitcoin?" And then doesn't settle you for 3 months. And we're out. So we learned the hard way how it works. So you then have your Bitcoin to get a loan against it. I could probably do it the next day.
So let's say that I have all my ducks in a row, and I can move through your onboarding KYC process with the right with the passport, and I don't have 50 different entities that might need to be looked at because you're very thorough. I know this personally. So in my case, it took 14 days because of the structures and needing to kind of get to, well, where is the who's the actual beneficiary. But that's an extreme case. Most people, if it's a self-directed IRA or something like that, or just direct ownership, or if it's through their RIA, it's going to be 72 hours. Call it. So now we're at Thursday. The money's the Bitcoin's in the wallet, and now I want to borrow the $3 million against it, sell covered calls to cover my debt service, and have my fiat in USDC that I can use to go purchase either whatever the other financial instrument is or the property is or whatever. You said the loan docs could be, originated and signed maybe the next day.
Yeah, and we'll get it funded.
First case, 2 days.
I think we should be able to get the thing all done and sorted inside the week.
Okay, and then what about the covered call stuff if we have that complexity in? Because that requires another buyer to come in or multiple to buy my different strategies.
That's executable. I mean, most of our stuff we execute onto Deribit, which is owned by Coinbase. So we would just go and execute that strategy for you. And what we're doing is we're not only executing it, making sure it's done exactly right, we're also managing all the margins and everything.
And those premiums are paid, those premiums on the covered calls are paid up front by the buyer. So let's just say for craps and giggles, I'm not sure if the premium right now on Bitcoin covered calls or not, but let's say that the out of money covered call is a 14% premium. Maybe it isn't, but it's going to cover 100% of my debt service, just for the example. It may not be that way, guys. That person's paying their 14% on whatever they bought from me. So let's say they bought all 3 million or whatever. They're paying essentially, $450,000 or whatever in premium day one. My debt service on the note, is that monthly? Like, how do I pay my debt service on what I borrow?
You have to put collateral up, but it is paid monthly, yes. So,
okay. Collateral goes into your wallet, however many Bitcoin I'm collateralizing, 60, 65% LTV, whatever I'm taking. That collateral moves from my wallet to the custodial wallet where the lender is. The rest of it stays in my wallet, so it's still self-custody. In other words, I bought $5 million worth of Bitcoin, which today would be whatever that is, right? 80, 90 Bitcoin. And so I'm putting 65% of those Bitcoin into the lender's wallet for custody as collateral. I'm getting now I'm paying debt service on that monthly at a rate of, call it 70, whatever it is per year.
Yeah.
I'm getting the premium payment from the transaction on my covered calls that you executed for me in my day one. So I've got some float there, because if I'm getting, call it 400 grand in cash for the premium payment on my covered calls,
you can also get it in, if you want, you can get it in Bitcoin.
I can get it in when you'll sell to me in Oreos, is what you say, right? Like, you'll give it to me in Oreos. But if I want it in USDC, or if I want it in something else, I could just have that auto pay off my loan.
Yeah.
Or I could have it monthly pay off my loan, and I could invest that into another strategy, playing the float to generate other cash flow.
Absolutely.
Inside or outside of you, meaning that's my money. I can do what I want with it. I could put it into a whole different bank if I wanted to.
Yeah. I mean, the thing is, if you can dream it up, we can figure out a way of doing it.
Now, Bitcoin crashes and it goes to, let's say I bought it today. So let's say I bought it today at whatever it is, 68K, whatever the heck it is, right? And let's say I borrowed at 65% LTV and it crashes to 34, just for the example. So now it's at 50%. I'm going to get a margin call.
You are, but you can.
I'm either going to post up more collateral Bitcoin to cover that,
or pay down the loan,
or pay down the loan by 50%.
Yeah.
which I can do with my fiat that I made off the cover call. I could just pay down the loan with fiat. Or I'm going to walk away from the Bitcoin altogether without recourse.
Without recourse. The only recourse we have is against the asset that you give us, and the asset that you give us is Bitcoin. So, you know, some North Korean supercomputer, Lazarus, blows the whole thing up and it goes to zero tomorrow, you walk away with the cash.
What is the message of helping the fiduciaries of the world, the RIAs that are managing other people's money and trying to figure out another creative way where they could do better by their client, but also still give the client the traditional boring cash streams that they need and want? What is it like working with them, educating them? What have you learned in 8-9 years, whatever it's been, you know, and what could you help fast track for them as a
They start off looking at you with their head on one side like a Labrador that doesn't quite understand. And gradually you can see when the light bulb goes on and they start to understand exactly the textures and the complexities of the asset that we're talking about. And it's not just a lump of gold. Gold's boring, always has been. Doesn't pay interest, doesn't do anything, just sits there. This is a much more interesting asset, and you can see that they want to know more. I spend so much of my time doing education, from hedge fund managers, fixed income hedge fund managers that I haven't spoken to for 20 years that crawl out the woodwork and want to know all about it. I had last week. There's a lot of education, and it's exciting. The industry that we're in is exciting. Shit a brick. I mean, we don't know what's coming next. Look at what we're talking about with AI. We've no idea what's coming next.
Well, yeah. And the only thing that we know is it will not look like the last 100 years. That's all we know is that the Swift rails, the banking holidays, the hours, that is, I think there's everybody listening to this, even if they don't understand fully yet or believe that Bitcoin is the beneficiary. Everybody understands the bank system's broken. Everybody understands that we are not suited.
But the banks are not. You get these Bitcoin maximalists who go, "Well, the banks are screwed and they're all going to go to the wall." No, they're not.
No, they're not going away.
Evolve into something else.
They're not going to go away at all. But they're just like every other business model is shifting. Their business model is shifting. If you're a SaaS company right now, your business model is gone. So you will either disappear or you will figure out how to value add into an agentic economy, because you can no longer package up a 90% wasteful business model and sell it for $30 a month when an AI agent goes, I don't buy that way. I'm not human. I buy the utility in real time that I need and nothing else. And I'm willing to pay you X for it, but I need to pay you in API calls on a second by second basis, not once a month for $30 and not use 90% of your HubSpot, right? Yeah. Like that world is not just limited to banks. So banks are not going away because banking as a necessity is not going away. But the business model and the regulatory environment has to evolve. And so Bitcoin's collateral as a piece of that is pretty undeniable, but we don't know what that's going to look like. And we certainly don't know what it's going to mean to the value of 21 million in your currency. What we know is one Bitcoin, Bitcoin.
Yeah. As my late father used to say, you can't put the shit back in the horse.
That's true. So I want to wrap up with one last thing, because we talked about the model of how you guys kind of end to end a white glove custom strategy for high net worth individuals or their advisors that that they've tasked with basically figuring it out. I think the sweet spot that we share a passion for and that you've built a phenomenal business around over there is that $1 to $50 million net worth family, 1 to 30 million, that is wealthy, that has achieved something that very few people out of the 8 billion in the planet have, and yet they are kind of orphans. Like, they don't matter because the world has gotten so barbelled with its, family office over here, multi-billion dollars over here, just above broke, barely making it over here world. 1 to 30 million. It's like, I can't make enough fees on you. I only advise on one thing. custom, yeah, I don't want to do that. And so I think you guys have really created an end-to-end trustworthy phone call at any time. And I've been.
The good thing is those people are actually looking after their own money, and actually interested. If you've got a $400 million family office, you're not investing on a day-to-day basis.
Right.
Yeah, if you're $2.5 billion family, whatever it is, it's that 0 to $50 million segment. They're actually involved day-to-day on what happens to that money.
Well, and making sure they don't lose it, and making sure that it grows at a rate that at least can, offset the debasement of the dollars they spend in whatever market they're in, and allow them to pass down whatever they care to pass down to whoever they care to pass it down to. And I think, it's about preservation of capital, but it's also, these strategies are future proof, future built, future nimble, but also analog in the sense of, I've called you, and my typical conversation with James is not 2 hours like this one has been. My typical conversation is I call him on WhatsApp or whatever, and he goes, "Hey mate, you all right?" And I go, "Yeah." And then he goes, "Can't talk right now. Is it important, or can I call you back another time?" And I'm like, "Not important. You can call him back another time," because he's on the phone with someone else who is important at that moment doing a trade. So I say that because he still picks up. And I think
that's important. It is important.
I think it's more important than ever. And I think it's something that not only differentiates you, but it's something that you guys have demonstrated before it was a tactic. I think it's going to become a tactic moving forward and a strategy, because human beings are going to not want to talk to more robots.
No.
They're going to want to know, even if the robot does a better job. I say this all the time, like RIAs have a business, not because they're better at trading or better at asset allocating than a computer. They're not faster. They're not better. They're certainly not more excited about it. But what they are is they are the person who trusts you. You trust them. They care about you. They've been with you for 10, 15, 20 years. They know grandpa's money, whatever it is. And when somebody's going to college, when so-and-so gets sick, when Pop-Pop's going to, move on to the next realm, and we have questions, they'll sit with you for an hour and a half, and they'll make you feel like like you matter.
I've been in a Waymo. I was down in Austin in Texas, and I went to the Waymo, and it drove me around. Did a couple of them. Really brilliant. Okay, actually drives better than most of the Uber drivers that I get in trial. Not a problem at all. Right? If you try and put me in a Waymo airplane, I'm not going. All right. There has to be human interaction.
Even though you know that 95% of that flight with a human sitting in it is not done by the human anyway.
100%. I'm actually safer. I know with, but I don't care. I want some guy with bad breath and glasses flying the plane. Right?
That's right. Yep. And I think more and more human to human stuff's going to emerge, even as we execute at speeds we can't even compute, in ways that we can't even think about yet. The human element is there. And so I think that's key. One of the things that we'll leave with is just as a sentiment of the market, you've got enough clients where I think it's interesting. What did you learn in the last couple of weeks when all the margin calls went out? What was the hit rate on people walking away versus paying?
I've had more margin calls in the last 10 days than I've had in the last 5 years. And
last 10 days than in the last 5 years?
Yes.
Okay.
So it just so happened that everybody took a loan out at 100,000. So when he got to 70,000, we were starting to hit with margin calls. And that was on Ripple, Solana, and the rest of it was all on Bitcoin. Actually, nothing on it. But every single margin call, every single customer has met his margin call. Okay?
So they stayed in.
And they haven't paid down the loan using fiat. They've bought more Bitcoin to put into the loan, or they've got Bitcoin already and they put that into it. And it's funny.
They just increased their collateral position with either new purchases of the collateral to then allocate over, but they didn't even use fiat to meet the margin or pay it
down. And talking to other guys in the same position as me, some of them running much bigger books than me. I know one guy, he's had something like 120 margin calls with his clients in the last few days, and every single one to a man has made the margin call and they've all done exactly the same thing. Almost everyone has put collateral in. And I can't, look, I don't want to be running the Goldman Sachs, scenario where, they say that nobody ever got rich by telling their clients to sell it. But this really is a bullish scenario we're in. And I think this is a level of the market I don't think we're ever going to see again.
Yeah, I mean, people they know this is not financial advice. It's merely things to make you go as they say. But
Yeah.
I think it's interesting when hundreds of margin calls go out between you and people that you peer set with, and this is not something that is being talked about sexy right now. CNBC is not pumping it. People are calling it dead again for the 18,000th time. AI is absorbing every news cycle related to risk on. Stocks are selling off. Consolidations are happening. Companies are buying companies left and right. Like we talked about, Canva just bought Affinity. You've got the AI stuff being consolidated. Bitcoin is not on anybody's radar right now. It's not the darling at the dance as it has been in prior disruptive periods. And yet everybody that met their margin call and didn't really blink. And so whatever the heck it's priced at in currencies today, might be worth looking at.
100%, especially if you're US dollar denominated, when I'm fairly convinced that you're going to get a devaluation of that against global currencies. And I personally have pulled all my money out of the US because I think I'm better served by having it elsewhere. And you look at what's happening globally, that there are lots of institutions doing that, BlackRock included. But yeah, I think it's a sensible place to be honest. I really do.
Yeah, well, and again, everybody has a perspective, and hopefully we've given you more to think about, to add to your perspective. I know James has given me more, as always, buddy. I appreciate you.
No, thank you. Always nice to sit back and actually have the time to chat to you, Chris. Okay,
I know how valuable your time is, and your clients value it. So I look at it as I stole you for 2 hours away from all the people that need you. But for those
we haven't been on for 2 hours, have we?
Almost.
Good heavens! Right, okay.
Yeah.
Sir, thank you very much.
So thank you for everybody on behalf of the Atomic Level for being here. Where do they get you? We'll put it all in the show notes. But where do you want them to contact you? What's the best place?
LinkedIn's easy. James Godfrey on LinkedIn's dead easy one, or james@sdm.co.
Right, and if they want to check out the firm, it's SDM Secure Digital Markets is what that stands for. SDM.co. All right, everybody. Thanks for being on the Atomic Level, James. See you later, bud.
Thanks, Chris. Cheers, mate.